Good evening, everyone. Time for another silver update. I want to apologize about my last video. I actually had found out I had my mic halfway plugged in, so that's why it cut out. And so it should be better from now on. Make sure I keep it plugged in. I'm going to go over the charts a little bit and then hopefully continue on with FOFOA. There's quite a bit to cover as far as the charts because there's a lot of things that have happened. I want to start off with the silver chart though. This is the daily that we've been following, and if you remember, I pointed out on one of the shorter timelines that the MACD appeared to be rolling over in the negative territory, and sure enough we got a correction there. It seemed to reach roughly 1/3 rally, and now it's turned down. Again, we're above this trend line, so the trend is still intact. It's actually a pretty sharp trend from about 17.5 to roughly 35, so that's a perfect double there, and that is in 1, 2, 3, 4, 5, 6, 7, 8, 9 months. So a double in 9 months, and the trend is still intact. So I wanted to point out what may be happening. We don't know. We'll just have to wait and see. But I wanted to pull some data from the last major correction that occurred. If you remember, back in 2008, we got a drop all the way down to about $9. And what I've drawn here is this was the last time that we reached such a dramatically oversold point in the MACD. And you can see by the lines I've drawn, I probably should have drawn the line more like this, but you can see the divergence in these lines. This bottom actually in the MACD occurred at $12, $12.50, and from that point on the MACD started to rally, but the price continued to drop until it found that bottom around $9, and then it started a long rally up. So the point of this is that generally the MACD is not going to stay in, it's not going to stay and trade below the zero line. Now it's true that it can. For example, you have this period here, which is roughly 4 or 5 months, where it traded above the zero line, but normally the MACD is going to find its way back to the zero line. So the question is, how do we find our way back? We're still at negative 0.61. Do we turn down and then continue? If we do something like what happened here, you can see we rallied and then turned down, and then we rallied up through the positive. The price though actually fell from 15 to 9. So doing some quick math, that's a 40% drop. If we mirror that, and I'm not saying we will, but if we do mirror that, that yields about 21.5. And it's kind of interesting that that actually corresponds exactly with this support line right here. So if we mirror this sort of situation with a rally in the MACD and then a failure and a continuing decline in the price, then we may be looking at 21.5 or so. Now, I don't think that that's really likely unless they do a serious deflation type of situation. You have to remember this corresponded with the financial crisis. So this was end of the world type scenarios. If you remember, they had to bail out the money markets because there was a run on money markets. Multiple financial companies went bankrupt. I mean, this was a huge financial crisis. We're nowhere near that sort of a crisis right now. So I think for silver to go back down like that, we're going to have to see a tremendous crisis. They're really going to have to step back and let things crash, basically. And I don't think they're going to do that. But if we do get back to 21.50, it's going to be an unbelievable buying opportunity. But I just have a hard time seeing physical silver available for 21 to 22 bucks, maybe a $5 or $6 premium they might put on that. So you might be able to get physical for, say, 26 bucks, 27 bucks if you're lucky, if we get that. But I don't think we're going to get that. So we'll have to wait and see. I wanted to pull up some other charts because we've had some kind of dramatic things going on. As you know, if you've been following the financial news, we've had some really dire financial news coming out regarding jobs, regarding manufacturing, regarding confidence indexes, things like that. And we've had some interesting moves in the currency. So I want to pull up the euro first. And this isn't close enough in, so we'll get a closer look at about 30 minutes. You can see we have a really strong rally that happened today and has kind of been occurring in the last couple of days in the euro. So the euro is rallying against the dollar. Now you would ask, why is that? Why would the euro rally against the dollar when the dollar has really bad financial news related to it coming out? Well, there's a number of reasons. One could just be the straightforward reason that it's negative for the US, therefore it's negative for the dollar, therefore the dollar is going to go down. On the other hand, it could also be that it's indicating QE3 may occur, and for that reason that's bearish on the dollar. Who knows? So that's what the euro is doing. If we jump over to the yen, it's even more interesting. If you remember at the time of the Fukushima situation, that was this spike right here. I pointed out that the Fukushima situation would probably be extremely bearish for the dollar. Reason being, the dollar-yen cross, I should say. The reason being because it would probably mark the end of the yen carry trade and cause a tremendous rally in the yen, for the reason that the Japanese would no longer be able to just continue to roll over their financial assets, but would actually have to raise cash, sell them to repair the tremendous damage. Now, if you remember, when we were in this near free fall, the G8, or maybe it was the G20, I think it was the G8, met and did a major currency intervention right about here, and we got a huge rally from about roughly 75 to 85. That's a big rally. And so we appear to be rolling over and now testing that sort of thing. So really, this central bank intervention that we had, they couched it in the phrases or terms that they were coming to the aid of Japan, but in reality they were coming to the aid of the dollar. So that's your dollar yen. Seems to be rolling over possibly into new lows, serious technical breach point. And then I like to watch the Swiss franc because it's really tanking. I mean, the moves in the last few days in the Swiss franc have been really dramatic. You can see just off a cliff sort of thing, and you can see we closed at the lows, at the very lows for the US dollar Swiss franc. And if you pull out and get a long view of this, actually let's go out farther and pull out the longest view, you can see that from about 1985 here, and this is the Plaza Accord, we're really in a very strong downtrend that continues. So this rally here, we could call this the Reagan rally. This was the end of the gold. 1979 was the end of the gold and silver bull markets. It was a ratcheting up of interest rates to as high as 20% even on the short term. And of course that attracted a tremendous amount of money to the United States to invest in those interest rate instruments. So that caused a big rally in the dollar, which ultimately was capped by the Plaza Accord. Now from that point the dollar has fallen, and it's significant. So we're looking at almost 3, so let's just say 3 to 0.8. So that's the dollar losing more than 2/3 of its value against the Swiss franc in that time period. And it continues. And you can see we definitely closed right there on the lows. So it looks to me like the currency speculators, who usually are the most savvy amongst the players, and it's the largest market out there, is the currency markets. Usually they're the most savvy, and they tend to get things early and right. And it seems to me like the trading going on in the Swiss franc dollar cross is indicating that QE3 is a lock. But we'll have to wait and see. So I want to pull up one more currency chart here, and for this one we actually have to go to the cross rates in Netdania, and then you have every country, then you go to China, and then you go to the US dollar China cross. Actually, I don't want to overlay, I want a new chart. So I want to point this one out because we've had a lot of politicians in the United States who've been talking pretty loudly about China being a currency manipulator and how China is artificially propping up its currency so that it can keep its exports high and peg it to the dollar and do all this evil stuff, which, of course, if you're a free trader or if you're a free market person, then you agree with me that that's just a stupid criticism. If China wants to sell us goods below their value, then obviously that's something that we would be happy for them to do. But it's not China's fault that we are profligate with the extra value we get from buying things below cost or what the cost should be. We should be able to save more money. Of course, we never save any money. So that's not on China, that's on us. But that's a whole nother topic. But as you can see, since about mid-2005 to now, we've gone from about, let's just say it's 8.3 to 6.5. So let's pull up our calculator, and we've got 8.3 minus 6.5, and that equals 1.8. So we want to take 1.8 divided by the 8.3, and that gives us 21.6%. So the value of the dollar since 2005, late 2006, let's say, till now, roughly a 5-year period, the value of the dollar has gone down 22% against the Chinese yuan or renminbi or whatever they call it. So that's not an insignificant devaluation. That's fairly significant. Now, obviously politicians are pounding the table demanding more. I don't really understand why, because I don't think they really understand what it means to have a weak currency. If you remember, Zimbabwe's currency devalued against every other currency until it became worthless and people ended up using other currencies in the country because it wasn't worth the paper it was written on. So for some reason, American politicians have it in their head that the best thing you can do for our economy is to let our currency devalue against the yuan. Well, you can see this 22% devaluation hasn't done anything to increase or decrease our trade deficit. It hasn't done anything to strengthen our economy. It hasn't done anything to create jobs. So not really sure how a further devaluation is going to help. Have to remember, if we do continue to devalue, inflation of everything that's imported rises, and that's pretty much everything. It also means that everything that China has to buy decreases in price. So it seems to be something that's in the Chinese interest, and it seems to be something that they're doing. Apparently our politicians don't think that our currency going to oblivion is happening fast enough. Apparently they want to just default on our debts through inflation. Be that as it may, a depreciating currency has never been a recipe for prosperity. So they're obviously misguided, and the last chart I want to look at is the gold chart. And you have to remember that gold is still traded as money by the central banks, and it is considered the best currency because it's no one's debt obligation, of course, and it's basically all the gold that's ever been mined is still with us. So it is a perfect currency because there's so much of it that any increase in the supply is so minute that it can't have a real serious impact on the price. Whereas silver, of course, which has been run down to nothing, can have very volatile price moves, even though I'm not going to buy into their argument that these volatile price moves have to do with supply and demand, because they don't. The volatile price moves we've seen have been because of manipulation. But nevertheless, because almost all the silver is used up, it does not have the stability of money the way gold has, in the sense that the price cannot be impacted by a gigantic dump in supply. So you can see that gold has pretty much ignored the deflation scare, which they appear to be cooking up to give them an opportunity to introduce some kind of qualitative easing again. And it looks like gold's not buying it. Gold's just rallying, and we could probably pull up gold in the other currencies to give us an idea of whether this is a dollar-based sort of thing or not. So let's pull up gold real quick in the euro, and it's not really, there's no real changes in regards to the euro. Canadian dollar, gold is very, very strong in the Canadian dollar. Great British pound. And it's quite, as you can see, gold is very strong in all currencies. Again, as we pointed out before, we're continuing a race to the bottom with all currencies. All currencies are devaluing against each other in a relative basis. I think the best analogy I ever heard was someone talking about two people falling off of a building and one's going faster than the other. So the guy who isn't going to hit the ground first feels that he's in a better situation. That's the type of deal that you're looking at with these competitive currency devaluations. Yes, the dollar's dropping against the euro, and then they turn it around and pound the euro through because of Greece debt or some other debt, and then the euro drops harder. But they're all falling straight to the ground, and gold is going up. So I didn't have time to get into FOFA. I'm going to try to do some more this weekend. Hopefully I have time, because I've been on a long stint on call. So I'm going to try to complete the FOFA series. I'm also going to try to roll out some more office series. And I just want to thank everyone who has clicked on the ads and gone to the sponsor sites and hopefully purchased some metals from the sponsors or whatever they're advertising to help make my channel a success. And we'll talk to you next time.